Hello everyone. Before having here socialist, I'd like to remind you all that we're still living in capitalistic world. We still need money is fun, money is nice, and I'd like to address a couple of stories that I came out during my 2 years journey while trying to build ASPI's protocol. And our approach might be a little bit different. So instead of reinventing, let's say, a wheel, or trying to make the world look like it should be, I'm saying that managing the ocean, we are thinking that finances actually make sense, and the world that we have right now is a better place than it was a couple of years ago, when you could just grab a fight in a bar, for example, then you get out, someone I don't know, killed your family or yourself just the night who was on a horse. And so generally saying that finance makes sense, learn finance and try to build decentralized organizations, not against the current rule, but taking into the consideration the experience that we have. So a couple of words about me. I started my career at management consulting. I used to work in finance a little. Then it became for me a little bit boring, because since it is quite rewarding, but still you have very limited responsibility and ownership over the results that you deliver in the majority of cases. So after that, I went to product and development. I failed a couple of companies that I tried to build. And I found myself in crypto when I read in 2017, I think, about the smart contracts and potential benefits that might be used in financial world. And so I'm very interested in a lot of concepts. I wouldn't say that I'm very, how can I say, bright contributor to a lot of stuff, but sometimes I write something and that might be curious. Majority of my interest is around game theory, economics, psychology, music, sociology. My partner is a psychiatrist, so we have pretty interesting conversation about that. And thinking about finance as a language that describing the world is pretty interesting. So today's agenda, I'm trying to make it really relaxed, and I'm trying to have more involvement and thinking about different ideas. So I wouldn't want to make it content heavy. If you have the questions, I will be happy to leave it at least 5 minutes so we can discuss, because it's more about, I think, building something together and on top of the existing efforts. So let's try to speak about finance and DAOs in English, right? So finance is a quantitative representation of reality. So what does it mean? So it started off with counting the stones. After that, during even Roman Empire, even earlier, there was the first companies that actually earned some funds and spent some funds. That's how the first equation of finance, profit equal to revenue minus expenses, born. And right now we have these people in suits who are talking EBITDA, alpha, beta, and whatever Greek alphabet out there. But it may sound complicated, but it builds really on simple concept, right? So it's you can see it on the screen. So it's profit, valuation, company value that might be determined by the down value, and that's the major difference with the crypto market. For example, the majority of the tokens doesn't have the base value, so basically you're buying something that don't you give any liquidation rights. So that's basically company become insolvent, how the funds being distributed among different participants. Stocks are also not token because they give voting rights and they give actual influence over how the decision being made into the company. So there are different types of stock, but basic idea is that you just divide the ownership into the company into multiple pieces, give them votes so that your piece of paper can actually determine something. Because without either of two things, either the liquidation price, liquidation rights, or influence the voting rights, that paper does nothing, because it can be abused and basically you will not have power against it. Also, some other stuff that's important to learn is liquidity event. It's event that might occur during like the liquidation of the company or acquisition of the company. That's which triggers the right for the investor who is holding the shares or the token in the future, right, to receive his own part of the things. Because when we think about VCs, for example, in traditional world and in majority of cases when VC is involved into the building the company, it's actually the capital that's being locked for a pretty long time, from at least like 3-5 years. Sometimes it takes a little longer to actually capture the value. So this is a really important event that actually pay off the investors, because when you're building the company, you are looking for this liquidity event. So someone will buy you, you do IPO, or in a bad case scenario, investors still can take the funds out of the company, right? All other bullshit words like EBITDA and so on might sound really complicated and designed mostly for accounts and reporting, but they do have sense. But so my message here is not to afraid of finance, not to being against the finance, but just learn in the same way like people learn Solidity and other programming languages, just to see the representation of the world, because it actually makes sense. So I'd like to also tell about little words about that finance and laws are built on blood and conflicts. So if you would look at finance as a language, which has evolved, as I showed, so that means that there might be reasons why it has been evolved, right? So the human conscious and our brain is evolving. We having more concept, more rights, let's say, more say, more hobbies, and we've been developing in different directions. So laws in finance were created actually to work with the conflicts. So it's like conflicts management tools, because you always have multiple parties. They have different interests, and when the interest misalignment happens, the fight happens, the war happens. And to avoid this, so there are like predefined rules or contracts that were involved, that were involved to actually make the decision according to these rules. And there are like some forces that help you to enforce these rules, but then the institutions were born. But what I'm trying to say is that world became much more secure and safe than it was a couple of hundreds of years ago. People are getting more access to financial services and their rights being defended. All possible conflicts have occurred already in the past. That's why finance language becomes so sophisticated in a sense. And that taking into consideration of building up on that experience of human history is important, because everything that exists for a reason, and we should build up on that. But again, not all financial concepts and laws are for the benefit of all. So what is legal entity? Legal entities, I like to imagine scales. On one part of the scales on the left, you have the treasury, which is basically the balance, all the assets that's stored and united for the from all the participants. And on the right hand, you have the registry of shareholders. So basically, on the left, you have, for example, like USDT, USDC. You can have real estate. You can have like commodities. You can have a lot of different stuff. Even intellectual property and so on. And on the right, you have basically 100% divided, if we make it really simple, and this 100% being distributed among the members of this organization. So basically, that's the shares. And the third one, which is how the scale is being used, is the protocol for making the decisions whether to spend funds from this treasury, pay dividends or invest and so on, or to redistribute the value from one shareholders to another. So basically it's like this set of rules, or you might say that this is like treasury value, cap table management, and the protocol of decision making on the top. Protocol is just like answer to the question how the decision being made, how to spend capital, how to appoint directors, and what are these liquidation rights I was trying to explain to you before. So there are like multiple types of legal entities, like you can divide it whether like public, private, limited, unlimited, closed membership and so on, but they like have really some common things. It's like shared ownership of assets, clear registry of shareholders, a clear division of benefits and responsibilities, and clear protocol for decision making. That's why company bylaws may take like a lot of like multiple hundreds of pages describing like all potential things that might be happening into the company and how to regulate that. And it took like years to build these rules, and a lot of companies has the history of operating for more than like tens of like or 50 years. And yeah, this is the experience that they've been working on, and that's why these documents are so might seem so complicated. So what is the share? As I already explained, share is the share in the company. Share is the do three things. The first of all, it's represent and calculates your share in the common pool of the assets. The second one, it describes your voting rules of the decision. And three, it gives you the liquidation price in the case of something happens with the company. Either it's being sold or it's being bankrupt. And so what is a DAO? DAO is the evolution of the concept of building the legal entities. In the same way like Bitcoin did revolution in terms of monetary management system, but basically distributing the right of printing the currency and distributing the wealth. In the same way, DAOs are actually the main innovation in the DAOs is that it moved the calculation of the rights from centralized registry to the decentralized registry. So instead of relying on centralized databases of the institutions, like some registry of shareholders like Global, the brokerage system, the clearinghouse and so on, you can work yourself, all by yourself. So this is the data that no one has access to. It's stored in the blockchain, and it basically can do all the same things that government does, right? And this is, I'm thinking about the DAO as the tooling actually to that can help to describe the current bylaws of the company, of the rules, how they operate. So the main thing why DAOs exist is for the conflict mitigation part. So if, for example, there is like classical problem from game theory, which is the conflict between the shareholder and the manager, then, for example, manager was trying to steal some funds or something like that. He is authorized to do that if he have access to the corporate bank account. Then a shareholder should go to the court, to the arbiter, this to actually make a manager to find guilty. After that, arbiter send the information to the police, to the army, or to someone like policeman, so they can actually force the bad actor to comply with the law. So this process has its own drawbacks, which is the corruption and creative interpretations of the law, which might not be applicable to everyone equally. And this is the thing that smart contract actually avoids. Because in this case, instead of being like paper contract, smart contract that is governing the interaction into the DAO becomes automated and autonomous and decentralized. That means that no one can govern it in a forced way. No one can enforce rather than the smart contract. No one can come up with some new things that can be implemented before making the final decision. Of course, you can reiterate and change the smart contract, but it will always work as it was designed, because it's not human. And there is like no way to enforce a smart contract not to do what it was designed to do. So the good representation of how things work in crypto, for example, is that okay, so there is like a company that's creating his own token. It has like legal team. It has like a bank account. It paid like the tens of thousands of dollars to open that and to start operating. And then it drafted the good paperwork. It had the good lawyers. And in the end, manager of this company can basically do with different types of the scams, starting with a soft scam, when he's like not trying so hard to achieve the results and just showing off his activity and paying himself like a big salary, and ending up with a real big scam when he just like can still manage to transfer the funds from his companies to some offshore, like buy himself Lamborghini and live cool. And from what we see is SEC is not actually protects, for example, the individual investors, instead of charges fines and works as a commercial structure. And so basically there is like a lot of risk associated with that. And when you try to regulate crypto in a way that it will make benefit for the investor and protect their rights, so you cannot regulate it from just issuing some legal documents and making people to comply with it, because you have a lot of different jurisdictions, you have a lot of different countries, you have a lot of different laws, you have a lot of different people, and not everyone protecting everyone and so on, and in all this mix you have a lot of risks, counterparty risks, which are always happening in this space. So why not instead to transfer, and instead of using all this like trust layer from these individuals and suits, why not to code it into the smart contract? So in this case, there is no trust required, accounting routine automated, so you don't need a lot of these workforce auditors and so on, consultants, and the code is the only law. So I'd like to talk about different types of the organization, as I said, but let's say that if we will look at it as just the language describing the existing organization, just by moving the relationship instead of being on a paper smart contract to the smart contract. In this sense, you can just like not look at it, because like there are a lot of different organizations and they have different relationship and they might be described differently, but there are like some types of it which are the common. So what I wanted also to highlight is that the current DAOs that we were hyped a lot during like last year and year before the last year don't actually give any rights to the token holders. So that technically means that they're not DAOs. So yes, okay, they have unicorn in their logo, and there is like some voting happens, but the DAO only becomes DAO when the treasury is connected to the token, when the decision to the changes on the code, for example, intellectual property rights, is also connected to the token, and liquidation rights and decision making over how to spend funds into the company, like treasury connection, is also in place. So that's why I think that we will reinvent DAOs in coming like 1 or 2 years, and already doing that. But why DAOs in general better than current legal entities? I would like to highlight like number of reasons. The first one is that it's undestroyable. So instead of relying on like centralized databases that can be hacked, or a centralized governance system, or like corrupt legal people and so on, I'm not saying that they all corrupt, but there is still probability, and from a mathematical point of view, it's better to trust to the code than to human. And it's not subjective. It's deterministic. That means that it will definitely behave like it was encoded to. And the execution of the smart contract is guaranteed. Also, the on-chain reputation is saved and it cannot be undone. And with connecting, I understand that there is like some issues with being fully transparent and showing off all your strategy, but there are like multiple instruments that can help you to avoid that. But yeah, and one of the main things why organizations should still like continue doing and build up on the DAO is that it's international. So that means that like ICOs opens the gateway to the capital into DC to majority of people who didn't have this opportunity. They were not born in like first world, and they were not like graduates from Ivy League university. But right now, anyone can have the opportunity to invest with top companies, do their own research, and join whatever they want. So one of the main reasons why I'm giving this talk, and with the only message that I wanted to give to the audience, is that think that instead of building from scratch, like organization design, we should build up on the existing practices. And when I'm saying that the finance is built on blood, basically, and a lot of conflicts were already solved by it, I think that we should learn a lot from the existing organization and just decode the current design of this organization and make it available for everyone. Also, it's important to notice that I do believe that the DAOs shouldn't be public and accessible to everyone. It should be more like private clubs of individuals, because like if you thinking about like from common sense, right? You not going to the streets to fundraise for your company and like giving to anyone the rights, how we already were discussed. And you're just like go and work with people you know or people you trust, and you start to build up together. And smart contracts might be like a very good way of fixing the agreements. Talking about the problems, I'd like to highlight, like from the priority standpoint, the first one is civil. There is like kind of tricky stuff which is happening, that a lot of regulators enforcing the KYC right now on major protocols and so on, which is against the constitutional rights of the humans to stay private, I think, and I don't support it. However, on the other hand, you have the problem of civil attacks. It means that you cannot necessarily investigate if the person has created like multiple wallets and trying to influence the company decision in a way if it's non-monetarized. So I'd like to say that the problem that needs to be addressed is the compliance and civil without the KYC, which is definitely possible. And I gathered the team to participate in hackathon to try to build the firewall for DeFi applications. Let's see how it goes. The second one is smart contract security issues, of course, but the good thing here is that each break or each hack which is happening is actually strengthen the whole overall concept from the fragile perspective. That makes it really good because we learn on top of each hack, and each new hack becomes like nearly to impossible. And so after that, user onboarding to crypto and Web3, so at least people will be using like a MetaMask, which is really important. After that, it's defined access UX to compete with its access, so which is really important too. More than assets evolution, I think, but still, that means that your DAO on the treasury balance will soon be able to store not only crypto tokens, but also like the commodities, store of value, real estate, or other stuff that can also be figured out. And you imagine how it will be interesting to have your fund run fully on the chain instead of relying on centralized entity that can be asked or forced for compliance and other stuff. And yeah, so bridges between the real world and Web3, which is basically the tokenization topic that was from 2017 already and up to now. Very important. So who already can go DAO, right? So I think it's majority of people still, it's the close circle of individuals that are trying to achieve something together. They should not have dependency on assets in physical world, and definitely not opening the bank account because I think it's too risky right now. Can operate without legal entity, so not dependent on like physical stuff. And don't afraid and don't ask permission, right? So that's the punk's ideology that was driven and that was driving crypto up to now. So a little bit about what I'm building. I'm building Aspis protocol. This is the protocol for creating on-chain funds. That is basically created in a manner that people can onboard their money to one smart contract. And this smart contract actually have the rules and access controls for permissions for the traders to trade these funds without need for people to trust these traders. So it's like based fully on cryptography, and the main reason for it is that instead of making the KYC enabled funds, you will be able to trust this smart contract, which is pretty cool, I think. So about our roadmap, we're starting with asset management DAOs for trading, and that's kind of different to the vaults things that is currently being in the space. So the main difference between vaults and the DAOs is that the first one is decentralized, and the second one is fully dependent on the manager who's managing the capital. The second one will be DAOs for protocols and projects, like real DAOs, I mean. The third one is DAOs for inter-DAOs cooperation. It's like when there will be like fund of funds or DAOs that managing multiple DAOs, like the previous speaker talked about Hydra, and that's really interesting concept. And the last steps will be DAOs to manage assets in real world, and the fifth one will be governments as DAOs. But in a way, like it may sound like unrealistic, but if you will think about the real power of the governments as a funds of funds, which basically distribute the money that's collected from people. And that means that it also can be made to the DAO, and it will be. I'm not sure if it will be like private or public DAO, but that depends on the future timeline of the humanity, basically. And the main reason why we will succeed and this will happen, because DAOs are transparent and clear, and because it is secured on basic math, and it has less transactional costs to global economy, meaning that more money will be multiplied by overall usage of these funds. So what's next? As I said, that DEXs are growing really fast, and a lot of people are migrating from centralized exchanges to decentralized. Asset types are growing, bridges and oracles growing, global crypto usage is growing, and from my opinion, there is no chance of DAOs not to replace legal entities, because it's just represent the same thing but in a new technology wrapper. Thank you all for attention. Questions?
So you mentioned asset sharing DAOs. What's your thoughts about what will be the first assets that will be like managed that way?
I think that the majority of things is the liquidity management among the popular crypto, like I don't know, USDT, ETH, the pair, for example. We are launching next week on I think 3 major networks right now for a test, and up to now the beta testers that we're using our protocol were mostly like trading popular tokens, and they were just like seeing the opportunity of switching from centralized exchanges to decentralized exchanges, because if you're like good behaving asset manager, that means that you just like transfer the risk of being exposed with a scam, for example, and other stuff to the smart contract, and you're also making your investor confident that you're not doing something bad. And in this way, it's just like more effective type of the technology. And also the good thing for you is that you're becoming like the self-serving cafe for your investors. So you just trade, for example, as the asset manager, and the investor can go in, go out, and they deal with the smart contract themselves. So basically, you just can focus on fun part and leaving all the boring part out of this.
I wonder, how do you make sure the asset manager are basically not trying to rug the users?
Yeah, this is the main thing why we exist. Yeah. So there are like 3 levels of protection right now for the investors. The first one, when creating the DAO, you as a manager specify the assets that you're able to trade, and we only support Chainlink supported assets, because for each swap that manager is doing, we also compare the target price with the oracle. So this is the second layer of check. And the third layer of check is that like we of course have like a manual liquidation thing. So if we will still see that the manager was able like to bypass like some security things, we will still have the delay for all the transaction. We have our own monitoring system. Basically, we don't collect any assets on our own wallets. However, we have the right to remove manager out of the capital, so investor can get back their money. Thank you.